If you're wanting to invest but feel like today's financial climate isn't a good time, you need to hear about counter-cyclical investing. Investment coach Debbie Roberts is here to explain it all to us this morning. Hey Debbie.
Good morning.
Counter-cyclical investing. Tell us, what is it?
It's basically going against the tide. You know, when most people are sitting on the sidelines thinking, oh, it's not a good time to buy because property values are falling, it's time to step in and take advantage of the opportunities that are there. So don't be a sheep, you know, don't follow what everyone else is doing, otherwise you'll get the same results as everyone else.
Because you can get a deal, and if you're holding for a long time, then this is the time to buy, isn't it?
Absolutely. Like I keep talking to people about how the property market in New Zealand is literally having a sale at the moment. You know, prices are dropping. They may drop a little bit further, but they might not. You know, no one's got a crystal ball. But at the moment, there's lots of advantages as well as disadvantages. There's pros and cons in every stage in the cycle. This is a normal stage in the property cycle, so that's one of the things I wanted to get across. And so should we run through some of the pros and cons of the stage?
Well, can we just start with one little con, which is interest rates?
Yes.
I'd be scared about, you know, jumping in with interest rates the way they are. Yeah. So do you need a strategy to deal with that over a longer term? Yeah,
so it's one of the toughest things about this stage in the cycle is the ability to get lending. You know, interest rates on average are sitting around the 6.5% mark, which when we look over the long term, that's actually average for interest rates. Although interest rates are starting to trend downwards over the long term, you know, the last 3 decades they've been coming down. And so when they do start coming back down again, chances are they're going to settle a little bit lower than the long-term norm of 6.5%. But one of the benefits is if you can get lending now, when interest rates are where they are, banks are testing your affordability to pay a mortgage at 8.5% on average now. So, you know, if you can get a mortgage now and you can afford to make those payments, when interest rates come back down again, you keep your payments the same and you're going to smash that mortgage quicker than you can blink.
I guess there is a little bit of the fact here that money makes money though, right? So if you're in a good position with good money, then you can find yourself in that situation.
Yeah, and
a lot of people don't.
A lot of people don't, and especially after the extreme weather events that we've had, you know, there will be people that will be quite motivated to sell properties that they've already got, which, you know, as brutal as it sounds, it's an opportunity for buyers in the market to negotiate a good deal, because some of those owners might have owned their properties for years, you know, and if you can help someone out of a difficult situation, you might be the only person that's making an offer on their house. So it's not like ambulance chasing, you know, it's you could actually get yourself a good deal and also help someone out of a difficult situation.
So we've been through the pros and the cons. When it comes to investing at this time, what are some of the things that you need to, you know, are there extra boxes you need to tick or things that you need to make sure of before you go ahead and
Absolutely, yeah. So there is a potential that prices could come down a little bit further. Like I said, they might not, but they could. So you can protect yourself against that by negotiating a discount. You know, negotiate hard on the purchase price, try and buy below its current market value, and that gives you a safety buffer if prices do drop a bit further. You've got the benefit of not having to compete with a whole bunch of other buyers, so you know, you can take your time with negotiation. If you buy a property that you can renovate a little bit or add value to in some way, that increases your safety buffer even further against drops. So you're basically creating your own capital growth instead of having to wait for it. So yeah, that would be my advice. If you're looking at investing, now's the time to be looking for, you know, as strong a cash flow as possible. So, you know, you'd be negotiating based on the numbers, not on emotion. You're not buying for capital growth, you know.
No,
so
now's not the time for that. Thank you so much for that, Debbie.
You're
Great
welcome.
to see you
Thank
as
you for having
always.
me.
That is Debbie Roberts, Property Apprentice owner and financial advisor.